thank you. Thank you for inviting me. It's a pleasure and an honor. And I have to say I'm very humbled to be in this very historic hall, giving this talk, which is the first talk on my new book. But I do draw on the old one, and just to clarify about confidentiality.
He's got a new book released Tuesday.
Yeah. The publishers have actually given this little card that I left downstairs, it's in print this week actually, and with the same title. But I've given lots of talks about the previous book, which is the Diary of the Euro Crisis in Cyprus, which I had also the fortune to have Charles Goodhart, who's in the audience today, to write the foreword of, and I was also deeply honored by that. And of course, it is a nice story to tell afterwards. But when it was happening, I can assure you, it was not nice. It was not nice. The good thing, of course, I don't talk about anything that happened in the governing council or in the Central Bank of Cyprus board meetings. Those are confidential, right? But I talk about everything else because I didn't. When I left, they didn't ask me to sign a confidentiality. So I could talk about the president's phone calls, which particularly interesting. And I was particularly pleased, actually. Recently, my publisher, Hargrave, wrote to me an email, just out of the blue, saying that the book is going to become an audio book through Audible UK, which is seems like an Amazon company. So I just wonder, you have these visions of that telephone conversation with the president, where he makes certain proclamations about his what he is in politics, how it would sound when it's been read in proper English. So I don't know, we'll see. But anyway, so today I'm going to talk about central bank independence. I'm going to try and defend it, obviously, right? But I'm going to talk about the limitations of it and also about governance and legitimacy issues, right, which are kind of go hand in hand in my book. Accountability and independence go hand in hand. It's not as much lawlessness as Kathleen in her wonderful introduction sort of perhaps described. So I'll start with the design flaws, right? So clearly this was a political project, and politics is very much part of, well, the history of Europe and the history of the euro area. Politics always was driving integration, right? Economics, I think we have to accept, is sort of comes afterwards and needs to sort of try and make the adjustments. So one of the biggest and very well known sort of by now design flaws was that you do have booms and busts in capitalism anyway, right? But when the euro came along, it sort of exacerbated. And it was nice at the beginning because it was a big boom and it lasted for a long time. You know, people in Cyprus, I remember, because I used to travel a lot to Cyprus. I was on the governing council of a university, a new university in Cyprus. I was traveling nearly every month, sometimes twice a month. And in those days we had Cyprus Airways, it was really nice. And I was able to upgrade and sit at the front, and I was like every time shocked by the amount of shopping done by all these Cypriot ladies from Harrods and Selfridges and all the Harvey Nichols, and it was so cheap, they were saying, so cheap, right? And of course at the same time, see, this I didn't know, I realized afterwards, they were borrowing heavily from the banks, right? So private indebtedness in Cyprus was growing, but it wasn't just Cyprus. It was a lot of countries, Ireland, Greece, and others. So suddenly interest rates came down, right? Banks had a lot of money, they were flooded with money, right? Cyprus in particular, it was Russian money. I'll come to that later. And you know, they know what to do with it. So plenty of liquidity, you know, cheap lending, the banks were throwing money at people, so. And we had a fixed exchange rate, obviously, right? And we had the hard currency. So basically, over time, this created all these imbalances, right? And when the crisis hit, and it hit sort of Greece first, right? Because I think they were, I think, generally the worst case in terms of the public debt, but also the way in which they were hiding reality. So people started questioning, right? And of course, another design flaw was that the central banks could no longer print money, right, in the euro system. So printing money was in the hands of the ECB, but then there were new rules that we all had to adhere to. You couldn't monetize, you couldn't lend directly to governments. So then the last resort, it's there, but it's only towards banks with new rules. And of course, when the crisis hit, we realized we didn't have a crisis management mechanism, which made it very interesting, right? And there was no automatic bailout, of course, also. So Germany suddenly, said it wasn't going to. So this is just a pretty picture, all these things. So it's from euphoria to breakup, and you can see interest rates, bond yields, going up to 35, possibly even higher, 35%. And there was a period in which they sort of nearly converged before that, and that's a period that countries borrowed heavily. Okay, and then we have all this picture of a famous economist receiving a Nobel Prize, and that was, I think, 2008. It's Paul Krugman, actually. And Paul Krugman was the prophet of doom about the euro. He was predicting, right? I mean, it's nice to go back and see what he was saying, right? Not to criticize him as such, because it looked pretty grim. That's the reason why I'm doing it, just to remind ourselves, right, that the euro was close to collapsing, close to unraveling. It was really that serious. I'm not doing this to just criticize Paul Krugman. Right? Some people do that. But there were other people, right? It wasn't just Krugman. A lot of, famous economists, think tanks, etc. Capital economics. I do remember them sending me letters when I was governor to help me get out of the euro. I do remember also the printing, the Swiss printing sort of company, money printing, Delarue, I think they're called. They came to meet me in 2012, World Bank IMF meetings. We think you might need some. It's very nice to look back at all this. And of course, the euro survived, right? Here we are. And Mario Draghi is giving interviews in his final month about how the euro survived. And of course, the way that the euro survived was certainly political, right? It wasn't just the central bank. There was, perhaps I think Krugman says now that he underestimated the political commitment to the euro, and that was the case. But that political commitment didn't come that easily. There was very, very difficult discussions, and there a lot of discussions, a lot of the bailouts were all last minute, and this is why I think Brexit will continue until the last minute, like, 31st of October, I think we'll be all up. Waiting for the last 4 a.m. or whatever.
Which year?
Yeah. So it was all last minute, basically, with Greece, and anything could have happened, and with Cyprus, right? I remember those days of March 2013. But yet, in terms of mechanisms, the EFSF initially was created and then became the ESM. Then we have the Troika, which was the Troika of institutions, the IMF, European Commission, and the ECB that managed the technical aspects of the conditionality of the programs. And then the Eurogroup, which became de facto the political crisis resolution mechanism. Right? And this is where it all happened, basically. It was all like Eurogroup, all last minute discussions. Lender of last resort, yes, to banks, and the euro system was providing a lot of liquidity to banks. At the peak of the Greek crisis, it was over 100 billion euros to Greek banks, and even to Cyprus it was at the peak. Something like that was about 100% of our GDP, 16 billion. It's a lot of ELA. And of course then the ECB at the peak of the crisis introduced a series, and this I go in detail in the book, what were all these, not just OMT, but from the initial part of the initial sort of phase of the crisis, what exactly they did in terms of the various policies they put in place. Some of them were a little bit, like the securities market program was a little bit not transparent, but in bonds of Greece and Italy and Spain in secondary markets, yes, but it wasn't at all transparent how much money was involved, etc. So it was criticized. So it was before Draghi, actually, the SMP, right? Of course, he was a governor, but it was Trichet at the time, so it wasn't just Draghi. And of course, what we did to back up Mario Draghi, whatever it takes. And in this book, I put all these personal insights in boxes, right? Like the story of Draghi coming back from London and having an informal meeting, not a formal meeting, because I can't talk about that, although Mario has talked about that in his last interview. And we were expecting, what are we going to hear from him after the talk he gave in London? That the ECB, within its mandate, the ECB would do whatever it's like, and we were asking each other, does he have something in mind? Then I think it was nothing in mind. We had to brainstorm until 11, in fact it was until midnight, we were brainstorming how to put substance into that. And the reason there was a delay in the OMT was precisely that, there was nothing. Right? So we had to give work to the committees, give them guidance, the committees worked on it intensively, and then there was a solution in the form of OMT. Right? And in the later stage, they started the QE, and that was when deflation risk appeared on the horizon and interest rates reached a zero lower bound. Right? So a lot of countries were bailed out. Spain was just a banking program. Growth returned to Greece. Even Greece is now out. So you might think, oh wow, yeah, you're safe. Is it? So a lot of architecture strengthening has happened. Important steps to create a banking union were made, and the single supervisory mechanism was created in record time. It was quite amazing, and I had the privilege of being in those discussions and seeing how much progress was being made in very little time. Right? By 2014, we had this. And it was only an idea in 2012. So it was in place in 2014 November. And we started supervising banks. And it was a good step in terms of strengthening and unifying supervision in the euro area. And then the single resolution mechanism, again, was created very quickly. The only thing that hasn't happened in terms of the banking union is the EDIS, European Deposit Insurance. Of course, we also have the BRRD, which applies to banks in the whole of the EU, not just in the euro area. So we have the uniform framework of dealing with regulation and resolution of banks. So it's a lot of things that happen, and I go through all this in the book. But the question is it enough? And of course, lots of people, I mean, it's a crowded area, the fiscal sort of and political integration that needs to be done. And I don't go into that in the book because I feel there are so many other people who are doing that. So I don't particularly want to do that. But a lot needs to be done. And I noticed that even that Draghi, in his interview in the FT last week, he's talking about fiscal, finally. Right? He wasn't talking about that in the first 7 years, I believe, of his term. He was talking about structural reforms. But recently, he's talking about fiscal. Right? So the flaws really haven't been addressed, I believe, and they are sort of fiscal and political integration. You can't have a monetary without the rest, I don't think. In the long run, right? So Mario is saying that we need a commitment, and it's right. You don't need even a timetable. You need a political commitment that we're going to get there at some point in time, in the fullness of time. But without it, I think it remains unstable. Now, something that's gone largely unnoticed is what I go and cover in the new book. And it's to do with the weakening of the architecture. What do I mean by that? It's the collateral damage, and that's central bank independence. Right? And central bank independence is at the heart of the monetary union. Right? it was conceived. And in fact, the history is that the Bundesbank wouldn't even go to the discussions, the early discussions, if there was a politician there. So they insisted that it's going to be just governors of central banks and the BIS in the initial discussion, so that they remove the politics out of it, right? So, and there's good reason for that in economics. I mean, we have huge amount of research in economics, both theoretical and empirical, tells us why. If you want price stability, you're better off sort of assigning monetary policy decisions to a bunch of unelected bureaucrats. So you leave them do their job, and they're unaccountable, not lawless. They are sort of accountable and go by the mandate, right? So when the architecture was designed, it was meant to have very strong independent safeguards, and that's why the EU treaty. Right? Cyprus had to change the constitution, many other countries, so they put that independence in the constitution. But when the crisis came, these safeguards were tested in practice. And my interpretation is that they don't work as well as they were designed, right? And partly it's because of the Commission. Partly the Commission didn't enforce. And I give the example of Hungary, but not just. There's more to it than that. And it's not just enforcement, right? This is just the treaty. It tells you what is there in terms of independence, how it's defined, right? And in tasks and duties, right? This is what is meant to be protected. But how do you interpret tasks and duties? This is something that I'll go on in some detail in the book. Right? There's different interpretations. It's got to do with this lawlessness that Kathleen mentioned.
I'm going to regret that. Can I put a lawyer and say ultra vires?
So the examples, right? So we have 3 examples in the last few years of governors resigning before the end of their term. They all resigned. I think Slovakia's governor is little known, Joseph Makuš, that he even resigned. But he did resign nearly 2 years before the end of his term. He didn't say very much. I did talk to him personally. But the stories in the press is that basically he was making space for the finance minister to become governor. Right? The Slovenian governors, lots of stories, death threats, etc., to do with resolution of 2 banks in Slovenia, imposing losses on so-called retail investors, bondholders. And my story, obviously, which I don't want to talk very much, is in the book if you want to read it. So the first book. So then there's another story in Latvia, right? Latvia went a step further. They just, I don't know, there are corruption allegations about it in my research. I don't know if they're true or not. But a due process was not followed. They just detained him, right, over a weekend. And then he was released by the judge on condition that he doesn't return to his job. So he couldn't set foot inside the Slovenian Central Bank, he couldn't go to Frankfurt. It took about 1 year. Eventually the ECB was thinking what to do, what not to do. They went to the ECJ, right, the European Court of Justice. And the European Court of Justice upheld the appeal by the ECB and basically found the Latvian authorities not upholding the treaty. So Rumsevic basically went back to his job. But for about a year, he wasn't. He was just removed without due process, just sacked, effectively, right? No due process. And this was somebody who's protected by the treaty. Just one judge, right? One judge removed him. So we only release you if you don't go back to your job. That's it, right? Now, it's not just those 4, right? I talk often to Yanis Tournaras, the governor of the Bank of Greece, and in Greece the stories were that we will do, under the Syriza government, right, not now, we will do to Tournaras what Anastasiadis did to Dimitriadis in Cyprus, right? They were trying to emulate, basically. They were investigating his wife, right? His wife's businesses. It was all directed at him, basically. They were doing all kinds of things to put pressure. Then there were the stories about Carlos Costa in Portugal, right? And again, it had to do with the resolution of Franco Espírito Santo. But what I'm trying to say is that a lot of governments came under fire, some resigned, some were pushed out. And of course in Cyprus I go through the details there. Here I just have one slide which tells you about the resolution function, the resolution authority. We have to do resolution, right? That's one of the things that are highly political, right? Imposing losses on investors, some of them are Russians. Same Russians were putting their money in Cyprus, unfortunately. Many of them were pets, right? Politically exposed persons. And next to these pets, the first time I saw those names, I nearly fell off my chair, right? These were the top new shareholders in Bank of Cyprus. The top 10, they were all peps, either current or former members of the Duma, or former ministers, or former KGB agents, senior ones, former friends of Mr. Putin, some of them. And next to those names, there was a Cypriot law firm, and there was the top 5 law firms, and they're all politically connected. And one of them was the president's law firm, Mr. Anastas, the current president, right? So, as a result, you can imagine there was a lot of toxic political fallout, and they changed the law of the central bank, although there was a legal opinion by the ECB saying don't do it or do something else, or respect independence, respect the decision making in the ECB. They just ignored it, and they pushed those controls. And what the government in Cyprus did was effectively to exercise control through the board of the Central Bank of Cyprus, because they managed to control the board. Now, does it matter? I think it does. I think it's contagious, right? And when I stepped down in 2014, the economists said, well, yes, it's a blow to Central Bank independence, but perhaps Cyprus is some sort of special case. I don't think it was a special case. History showed that Slovenia, if anything, the pattern that was followed was very similar to Cyprus. And Boston Yazbek thought that they had advisors from Cyprus. So, I don't know if it's true or not. So, there was, it's contagious basically, that's my view on this, right? And they say, oh, it's all periphery. Does it really matter? Does it matter? Does Europe's periphery matter? Yes, I think it does matter, for 2 reasons. The first reason is that even the governors in the core countries can change their behavior when they see this, right? It's much harder to detect. But I have one example, and I put that in the book. And the example is Banca d'Italia. Do you remember some banks in Veneto region that failed, right? They should have bailed in bondholders. And the Italian government said, no, these are retail investors. And they lobbied very, very hard. And they had an election upcoming, obviously, right? So they were worried about the votes. I visited that region in Italy. And in fact, people from the university there in Verona were telling me this is exactly what happened. They were very worried about the votes, right? So, miraculously, Banca d'Italia, although they agreed with the bail-in and everything, they just completely sided with the government, the Italian government. And basically they said, no, these are not systemic. They should be dealt with national law. So that in the end, the Italian government put something like 10 billion to in effect, bail out. It was a scheme through which they liquidated, but they managed to pay the banks who bought the assets so that they could sort of avoid imposing losses on investors, because allegedly they were retail. Somebody in an earlier in an earlier resolution, one Italian, old Italian, committed suicide. So they were so worried about it. Right? But what happened was, I think it was the same time that the governor was going to be reappointed, and he was reappointed. And since then, I think when I see Ignazio Visco, he doesn't. He's more cautious when he talks to me. So, I don't know, but I think it's much harder to detect. But I believe others are worried, they're watching their backs. Should we go against our government's wishes or not? Right? So it's very powerful when you see these examples. And of course, what is the danger here? The danger is that even when it comes to monetary policy decisions, you might in the future see less consensus. I mean, Mario admitted there was no unanimity anyway, he said last week. But I fear that there could be more and more national interests competing on the Governing Council of the ECB, which is not meant to be like that. Right? So this would create policy uncertainty moving forward. Another reason, and I'm going back to money laundering. Right? I have a chapter on political money laundering. And this is another reason. Just so happens central banks in many of these countries, in the periphery especially, are also the AML supervisor. It so happens that and you have all these scandals, right? You don't know about the BLV, and there's also Pilatus Bank in Malta, and the failings there, talk about that, and Danske, Estonia, right? So the dirty money comes in through the single financial markets through the weakest link, right? That's how it's going to come in, and then it's going to do things, and then it's going to affect stuff. And it's not just, what it affects is not just financial, it could be also political. That's why it's political money. It may come with a purpose, if it's Russian oligarchy, right? It could affect stuff like referendums, elections, whatever, right? So that's a big weakness. It's been ignored because SSM does not include anti-money laundering. Anti-money laundering remains in the hands of national member states, and in small banks, in small countries like Cyprus, Malta, Latvia, Estonia, right? All these periphery countries say, oh, they don't matter. This is where it all comes in, right? And this is where the regulators can be inadequately resourced, can be captured by interest groups, and subjected to political pressures, right? And of course, if you want to know why the periphery matters, please watch this. This is my claim to fame. I'm there with Carl Penn, the actor, who used to be the Associate Director of Public Engagement for the White House under Obama, this year, under Barack Obama. And this is a documentary by Andrew McKay, who did The Big Short, right, movie, so, and it's on Amazon Prime. And it's episode 1, Money Laundering, How-To Guide. Now here is scene 11. And there's something there about Wilbur Ross there, the current US ... But I will leave the rest to you to have to take the interest out of it, right? So it's how the world is connected through this, right? So the notion that, well, who cares about Malta, who cares about Slovenia, who cares about, Latvia or Cyprus or Estonia? You should care, basically. So did Mario Draghi save the euro? Well, certainly during his term, the euro is there. It's finishing this month, I believe. But I do believe there's been collateral damage, and he was in charge of the euro, so I think, that collateral damage happened during his term. I think there's lots of, legally the ECB, whatever it did, I think was upheld, right? Let's make that clear, by the European courts, right? There were challenges, and none of them succeeded, including on OMT and also on QE, pretty similar, right? So it's not been illegal, unlike some other sort of governments found to be doing illegal stuff, right? But politically, there are questions, right? And you can't avoid them. Some of the questions have to do with QE. There's no doubt about it, right? I'm not going to sit here and defend QE, right? QE and negative interest rates, in my book, were never meant to be permanent. They were meant to buy time, right? For governments to do what they needed to. I don't think they're meant to be a permanent fix, right? Mission creep has to do also with the Troika. The role of the ECB in the Troika has been criticized, right? And that's another big criticism of the ECB. What was the ECB doing there? In fact, it was not even accountable. They were not even accountable to the Governing Council. what they were doing, right? They were just reporting to us, but never accountable. So it was a bit odd, and it was also the German member of the executive board in charge of the ECB's participation in the Troika. So that was really odd, very strange, and very political, right? And this was happening under Mario's term. You know, we would just sit there and listen to York Rasmussen, right? And York was you know, telling us how bad Greece has been. Right? So I think that was mission creep, right? You have to do something during the crisis, you do it, but then you try and legitimize it, and it's very, very difficult, right? So money laundering obviously is important, but you know, generally, I think part of the problem, and this is part of my going to my recommendations, have to do with governance weaknesses, right? And the governance weaknesses that I highlight in the book, in the central banks of the Eurosystem, but also in the executive board, right? We have fit and proper criteria now that are the same in Europe for people on the boards of the big banks, all banks, right? They are done by SSM. They're the same now. Now, when it comes to appointing people on the board of central banks, there's nothing. It's just every country does its own thing, right? And they're not, obviously, they're not uniform. So some countries decide to appoint people who wouldn't qualify for being on boards of commercial banks to be central bank governors, right? People, I think Slovenia tried to appoint CFO of a bank that failed, Postbank, right, to become the governor. It didn't happen in the end because of some Bloomberg stories, and I commented on that story. But I said exactly this: how can somebody who is not fit and proper to be on the board of a commercial bank to become a member of the governing council of the ECB? Well, this is just a big, glaring weakness in governance, right? And it's because you don't have those standards. Of course, you need political agreement to get those standards. In Cyprus, we have in some sense worse, because it goes unnoticed. People who are CEOs of banks who've been found not to adhere by AML, anti-money laundering standards. Right? The banks have been fined when they were CEOs. They're now on the board of the Central Bank of Cyprus. Right? Former bankers whose banks have been found guilty of violating AML. Not that they did money laundering, but you know, the banks were found guilty of it. And similar things, other conflicted individuals from the sector that brings in the Russian money. They sit on the board of the bank. In the bank, the central bank is in charge of anti-money laundering standards. So that has to somehow be addressed, right? And if you don't address it, I think that basically you project an image as central banks that it's not right, and it can't be legitimate, right? You can't be preaching, you know, for independence when your own house is not in order. Bottom line is. So I think that's kind of important. It's completely ignored and neglected so far, even in all these recommendations for improving the architecture of the euro. So would the euro survive? Well, I think there's a lot needs to be done, right? And of course, governance and communication are critical, right? So I have 6 recommendations. I can talk about them during the discussion if you want me to, in detail, but I'll just leave them there for. Is it my time? Yeah. So that's my commercial break at the end.